Asia markets climb across the board, with the tech sector recording losses as the S&P 500 and Nasdaq fall for the fourth straight day. Turkey's retail sales surge, growing at the fastest pace in 7 months. And the US and European Union vowed to impose further sanctions on Iran following its retaliatory strikes on Israel. Hello, I'm Oscar Subakti with the latest business and finance news here on TRT World. Asia-Pacific markets surged on Thursday despite Wall Street's losses, with all major indices climbing. South Korea's Kospi has rebounded strongly, leading Asian markets. Japan's Nikkei reversed its recent losses, aiming to break 3 consecutive days of declines, while Hong Kong's Seng and Australia's ASX 200 have also climbed. In the US, all 3 major indices experienced losses, with the Dow Jones recording its 7th negative session, the last 8. The S&P 500 dipped about 0.5%, while the Nasdaq tumbled just over 1%. Tech stocks led Wall Street low, with Nvidia falling nearly 4%, and other giants like Netflix, Meta, Apple and Microsoft also experiencing declines. Let's get more on this now with Frances Coppola, who's a financial economist and author and blogger. She joins us now from Rochester in the UK. Really good to have you back with us, Frances. So we are seeing a slight rebound on Asian markets, despite some losses on Wall Street. What's driving investor sentiment right now?
Well, there's a few things. The losses on Wall Street were to do with the Fed's guidance on interest rates staying higher for longer, which didn't bode too well for inflation, and so there was some nerves around that. And there's also the drop in tech stocks, which has been going on for a few days now, which kind of reflects poor earnings really from a major supplier of machinery for chip making, and general investor worries that this might signal the end of the bubble that's been going on for about a year or so now. So this might be the beginning of a reversal. But that's not what's driving the boom in Asia. Asia is a little bit insulated from that, and there's quite a lot of upbeat feeling. I noticed particularly in Australia, for example, there's the stocks are being driven by miners. Iron ore is up quite a bit and so forth, and that tends to rebound across Asia.
Yes, and Frances, you mentioned the recent eye-watering gains in the tech sector. Nvidia is a huge part of that story. We know that chip maker is seen as perhaps one of the leaders in artificial intelligence technology, but we did see a 4% decline in Nvidia stock, a stock that's really ballooned in the last 12 months. What's behind the most recent dip in Nvidia's fortunes, do you think?
Well, I think some analysts have been predicting a reversal for a while now, saying that it has gone up so much. It's driven by the AI interest, really. And, all such surges do tend to come to an end eventually. So some people have been predicting that Nvidia was due for a reversal, and this could be the start of it. It was ostensibly driven, though, by poor earnings in one of Nvidia's principal suppliers, which suggested, and a poor outlook generally, which suggested that the boom in demand for chips is starting to drop off, really, as companies like Meta and so forth take their AI developments in-house, and so the need for external suppliers is declining somewhat.
Yes, you also mentioned Jerome Powell's latest comments, essentially dampening expectations of any imminent cut to interest rates in the US. Investors have been digesting that news as well, haven't they?
Yeah, absolutely. They've been thinking that maybe this means that the outlook for inflation is not so good. Perhaps that means that the outlook for the American economy is not so good. And historically, when interest rates have stayed high, stocks have not tended to do so well as bonds anyway. So we might expect that a prediction really that interest rates might stay higher for longer might have a depressing effect on stocks.
Okay, Francis Coppola, always great to get your thoughts. Thanks so much again for joining us.